All right, hello, this is Mike with the NetPicks Inner Circle. In this week's options trade of the week, we're going to take a look at our options fast track program on QQQ, which is the Nasdaq ETF. In weeks past, we have taken a look at selling a lot of spreads. We've sold some call spreads on names like Facebook and Netflix. A couple weeks ago, we sold an iron condor on Halliburton, and those trades are working out great for us at the moment. We're going to take a drastically different approach here today. We're going to keep things very simple. I love to sell premium. I love to sell spreads like we've done the last couple of weeks, but there's also a portion of my portfolio that I want the bigger profit potential. Right? So if I buy a call or a put, even though I have a lower probability of success when compared to selling a spread, when those trades work out, they leave me with a much bigger profit. So a combination of the two approaches, buying some options, selling some options, that really gives us a smoother overall equity curve long term. It starts to build in another layer of diversification. So today we're going to take a look at our options fast track program, which is more focused on reversals in trend. We're looking for near-term overbought and oversold conditions. We identify those conditions by utilizing the %R indicator, which you'll see at the bottom of this QQQ chart. Earlier in the week, you can see that we did get a move up above the -10 line. That's the upper yellow line there on the bottom of my chart. That indicates to me that we are overbought in the near term. That stays at an overbought condition until we break below the -50 line. So even though we're not above -10 here at the moment, we're still above -50. So we're still classified as overbought. That's why I'm considering a short trade here. Now, we already had a winning short trade from earlier this week. The setup that I'm highlighting here right now, that indicates to us a short trade that was entered and closed out within 24 hours. Gave us a full profit, but we're still overbought. So we're looking at a second attempt at a short trade. So we just identified that we're still overbought on the %R indicator. That's step number one. But that doesn't mean I just jump right into a trade, because we know markets can stay at extremes a lot longer than any of us expect. So I need to wait for step number two. And for that, we look towards our signal line. That's that solid white line on the chart. I need one candle to close below the signal line. Well, that started happening yesterday. Yesterday afternoon, we got this candle to close below the signal line. Once that happens, you're going to see the pink dots start to print on the chart for us. The first series of pink dots, that's our entry point. We have two targets down below, and we have a stop up above. So even though this trade hasn't triggered in yet, everything is outlined for us. I know exactly where to get in, where to get out, and that takes a tremendous amount of pressure off my trading. I don't need to be there all day long staring at the charts, wondering, should I get into this trade or should I not? Everything is broken down for me to the penny. Huge advantage. Now, the third and final step, we have to wait for price action to touch the entry point. It clearly has not done that yet. Okay, but the setup is valid if we get a breakdown towards 170.66. If that level is hit here this afternoon or even into early next week, we know that's the time we'll go ahead and put on a bearish position. Now, for this type of a trade, I'm going to take a look at just buying a long put option. Very simple, straightforward trade. So let's go ahead and take a look at the trade page here. I'm going to zoom on over there to QQQ. For this trade, I'm going to take a look at the April monthly options. They have 35 days left to expiration, which is a little bit longer than we normally look. Okay, we normally like to see options with between 20 and 30 days left to expiration, so there's a little bit more time there, which means it's a more cautious approach, and I don't mind that given the current environment. The market's been very indecisive here this week. We have not seen a lot of quick movement back and forth. The danger in going with a shorter term weekly option here is the moment I buy that put option with a weekly cycle, that time decay is significant and it's working against me. If that trade doesn't move immediately in my favor, the time decay is going to take any profit potential that I have. So I'm going to go out to the April monthlies. Even though I'm paying more for those options up front, it's leaving me with a more conservative trade. I've got a little bit more time there where I can hold the position and not have to worry about that time decay adding up in a significant way. Okay, so the April options with 35 days left. Now we need to decide what strike price do I want to go with. With our entry point at 170.66, I would like to buy an in-the-money put option. A lot of times people go to the cheap out-of-the-money options. You know, the cheaper price is more attractive to the small account. What they don't realize is those cheaper options, they're cheap for a reason. They have a very low probability of success. They're all extrinsic value, meaning it's all time value. It's all time decay in those options. If that trade doesn't move in a big way in your favor, you're going to lose money immediately. So I would rather pay more for those in the money options and give myself a higher probability of success. So I like to get 1 to 2 strikes in the money. The 171 put, by the time we hit the entry point at 170.66, the 171 put is going to be the at the money option. It's going to be the closest strike price to the entry price on our chart. I want to get 1 to 2 strikes in the money from there. So the 172 put is considered 1 strike in the money. The 173 put is considered 2 strikes in the money. I like the 173 put here. I like to be a little bit further in the money. Ideally, I like to see a delta between minus 0.6 and minus 0.65. The 173 put only has a delta of minus 0.56 right now, but by the time we hit that entry point, that delta should be right inside of our sweet spot. Again, minus 0.6 to minus 0.65 is ideally where I want to be. Now, I also want to make sure that those options have good liquidity, meaning they need to have good volume and open interest. Well, because QQQ is an index product, the liquidity is not going to be an issue. There's plenty of volume and open interest on many different strike prices. It really doesn't matter your position size here. If you're trading 1 contract, if you're trading 50 contracts, you shouldn't have any problem getting filled on QQQ. So I like the 173 put here. It's right now it's trading for just over $400 per contract. So a little bit more expensive than what many people might be used to, but that's because we're going out 35 days with the April monthly options. We're going to pay more for those options up front, but it's actually a more conservative trade. Those options are going to react slower to changes in stock price. So I don't mind paying more up front for these options. Whatever I pay for this put option is the most I can lose on the trade. So a lot of times people get intimidated, whether it be trading stock or options, because they feel you have a large risk. You have the potential to lose a lot of money. Well, in this case, if I spend $400 on this option, that's the most I can lose on the trade, regardless of what happens. Instead of moving lower, what if the Nasdaq moves straight higher over the next couple of weeks? It does not matter. The most I can lose on that trade is $400. The most I can make on that trade, is essentially infinite. I have unlimited profit potential, which I guess that's not exactly true because QQQ can only go to 0. But, in theory, as long as QQQ moves to the downside, I continue to make money. So if that happens, if we buy this put option, if we start to get down towards those target levels, in most cases, we typically see between 50 and 150% returns. Okay, so you're potentially looking at, between $200 and $600 of profit potential if this trade comes down and hits a target. So I really like the profile of this trade. I mean, it's potentially a pretty large winner for us if we get that quick move to the downside. So now I've identified my put option. I like the April 173 put, but going back over to that chart, I can only grab this trade if price action gets down to 170.66. So again, I have to wait for that to happen, whether it be this afternoon or early next week. I don't want to jump in now because what if price action doesn't go lower? What if we just start to zoom right back to the upside? If I jump in now, I'm front running the trade and it hasn't triggered in yet. This trade still might cancel. It would cancel if price action closed back up above the signal line. So I have to wait for everything to line up in my favor. That's the great part about having a system in place. You have a set of mechanics that will guide you in every situation. Again, there's no guesswork here. Everything is crystal clear for us. So this is a really nice complement to some of our other trades that we have on. Okay, the Facebook, the Halliburton, the Netflix trades. I still like all of those positions. Okay, we're just going to start to add to it. We're going to add in a completely different approach with the long put here, give ourselves a bigger profit potential, and now we'll see what happens here over the next week or two. I really like how this market is setting up on the downside going into next week. We have to get through options expiration here today. The March monthly options are expiring today, so oftentimes the markets favor the upside on expiration day. We'll see what happens early next week. I do really like the market lower going into next week. So as always, if you have any questions at all, feel free to leave a comment here in the blog or send me an email directly. Mike@netpicks.com is the email address, and I'll get back with you right away. All right, so we'll track this trade going into next week. I'll be back next week to check in on all of our open positions, including this potential QQQ trade here from today. All right, we'll talk to you guys next week.